Wednesday, and as I promised, here's a Wisdom Wednesday for you. So I want to talk about land contract versus rent to own, or just either paying cash or getting a mortgage for a property. Now, a land contract usually sounds like an easy way to buy a home. And I got to tell you, there are some situations where a land contract is a better option for a buyer. But in most cases, if you put in the work, if you find out what programs fit you, it's actually better to just go ahead and get a mortgage. So let's talk about what a land contract is. This isn't a deal that you should sign on the hood of a car, give somebody a few $1,000s and promise to pay monthly. When you are entering a land contract, you are actually purchasing the home. The seller, however, just becomes the lender. You're not going to a bank. You're paying the seller directly. So when you're doing a land contract, you should do everything that you'll do like you would with a mortgage. Everything, all title work should be pulled. That means a title company should be involved. They should do a title search. They should make sure there's no other liens on the property. You should get a warranty deed and title insurance. And your deed should be held in escrow. And what that means is that based on the contract that you have, the deed will be held until it's satisfied. And there should be something in place that, God forbid something happens to the owner, if you continue to meet your obligations, the deed is still transferred to you with no issue. So someone should be in place to honor that at the end. So you think about it. It's a little risky, right? If something happens to the owner and they don't have anything in place where you can contact the next of kin or whoever they appointed to their estate that you paid this off, what happens when you pay it off? You've been buying this house. Also with the land contract, they are not a landlord. You own the house. This means that you're going to file a property transfer affidavit. You're going to file homestead documents. So it shows that it is your primary residency. So the taxes will continue to be based on that. You will have homeowner's insurance. You will not call the seller for anything related to repairing the house. So you are 100% committed to this home. You're buying it and you're paying the owner directly. Now, rent to own works a little differently. This is a contract between the renter or the buyer and the seller that allows the buyer to rent the house and then thereafter purchase with the option to buy it after an agreed period. Now, this option to purchase begins through the payment of a larger rent or lease payments during that period. Now, this involves less obligation whereby the buyer has the option but is not obligated to buy the property after the contract period, right? And then the buyer reports interest paid as mortgage interest. So they still have that benefit. In a rent-to-own agreement, ownership rights belong to the seller until final purchase. So, it depends on how the contract is written. They may have in there that the seller is not obligated to make any repairs, or they may be. Who knows? That really depends on the relationship and the contract. Everything is contract driven. Now let's compare these to this going through the process of buying a home. One myth that I've noticed that people have is that because they have student loans, they can't get a mortgage. That is absolutely incorrect. If that were the case, nobody would own homes. If you ask 10 people if they have student loans, 8 of them probably do. So think about that. Do student loans really stop people from buying homes? Absolutely not. What stops them actually is that the payments aren't being made, or they're in forbearance or in deferment. So that income or that debt has to count as part of your debt to credit ratio. So you want to make sure that you're paying and you're paying on time, and your lender will still approve you. Okay. Secondly, you need a lot of money to get into a home. Absolutely not. You could ask the seller to give you seller's concessions, which is usually a percentage of the purchase price towards your closing cost. You may be eligible for down payment assistance through programs like MSHDA, where they'll give you up to $7,500 in a loan for your down payment assistance and closing cost. There's also other programs that banks have. Okay, so myth number 3 would be that you have to have a 700 credit score to purchase a home. Some lenders will let you have a credit score as low as a 580, but most are looking for you to have a score of 620 or 640. Now, there are a lot of lending options out there. You have the FHA lending, which is one of the more common, more popular, because there's only 3.5% down and then your closing costs. You have conventional loans. Now, conventional loans in the past used to be 20% down, but a lot of them now are 3 to 5% down, which is pretty awesome. In most cases, you need a 700 credit score or better for a conventional loan, but I've seen some people in the high 600s still qualify for a conventional loan. Now, the major difference between FHA and conventional loans are that FHA loans are backed by HUD, the Housing Urban Development, and conventional loans are backed by Freddie Mac and Fannie Mae. Okay, now conventional lending is a little bit less strict about the appraisal, meaning you can have a fixer-upper, where FHA lending, they're looking, are there switch plates? Is there a hole in the wall? Is there a plumbing issue? They want things more move-in ready. They don't have to be beautiful, but more move-in ready. Safety and structural things are a really big deal. So you have a little bit smaller of a pool of properties you can look at, but it is not impossible. And most homeowners want their homes to be FHA eligible, so you'll still find a home. Okay? Right now, it is way less expensive to buy than to rent. You think about it, the average rent in a decent place is about $1,500 a month. Anywhere from $1,000 to $1,500 a month. Okay? Now, if you're paying rent right now and you are thinking about buying a home, one way to prepare for that is, of course, preparing your credit to meet, the credit standards that you need score-wise. Keeping your debt down. So if you have a credit card right now, start to get that debt down a little bit. And also, if you're paying rent, leverage your rent payments as far back as 2 years to give you credit on your credit report, give you a trade line that, that's the biggest bill you're probably paying and nobody knows but you and your landlord or the property management company. You can leverage those payments to help improve your credit score. If you want to find out how, I do offer those services. So think about those things and don't be scared. Don't assume. I have a lot of clients in the past who assumed they wouldn't be approved for a mortgage. And when they called me and I referred them to a lender and the lender says, yeah, they're good, you can start looking, they are utterly surprised and they become homeowners. Don't be afraid, guys. What's for you is for you. And it's probably out there and you're not even grabbing it. So listen, I'm here to help you. Let me know if you're ready to buy a home. If you're thinking about it, that's one of your goals. We could start the process now. If you're thinking about buying next year, now is the time to really look into that process. You may be closer than you think. Now, I hope that you find this video helpful. Please feel free to subscribe to my YouTube page. Also, look out for these videos throughout the month. Wisdom Wednesdays, you can find me at Sold by Ronnie on IG, also on Facebook, and you may also find me on LinkedIn. I hope you found value in this. I want you to have a great rest of the week. Talk to you soon. Bye.